All right, guys, glad to have you here. Mike, thank you very much for sponsoring the event for us this evening. Excited that we have 30 and climbing so far in the webinar. So I'm going to give you a little bit of background, first of all, on currensys and how it was developed and how it came about. Um, currensys was developed back in 2005 by a good friend of mine by the name of Phil McGrew. And Phil was and it still is, a nuclear engineer. Worked on the subs for the Navy. Decided to leave the services and went to go work for a electrical power company, again in the nuclear industry. Um, he then started to trade electricity actually on the floor, and found his passion for trading. Wanted to do it for himself. Figured that he made the companies a lot of money and wanted to go do it on his own. So took him about 6 months or so in which to develop the system, rule set, methodology, and basically that's how we've come up with currensys today. The first sales of any currensys was back in the middle of 2005. So we've been doing this for about 8 years now. We have thousands of traders around the world utilizing the system. Some, I have to say, more than others, are successful, some aren't. And I'm going to get into the reasons of why some aren't successful and some are. But really the central point about being successful is if you're following the rules, if you have a trading plan, you stick to the trading plan, and you follow the system. If you go all whacked out there and do all kinds of crazy things, you're bound to get in trouble. I'm here to tell you that there's no 100% accurate system. That you probably never heard that before come out of anybody's mouth, because all the cheap EAs and things out there say that you can make $1 million overnight. Well, I'm here to tell you that that's just not the case. Past performance is not indicative of future results. And what does that really mean? That means a signal today might not be successful tomorrow. However, if you have a good system that works in all market types, and we'll get into those a little bit later, but if you have a system that works in all market types, you have the opportunity for success because the market is ever changing. It's not always in a trending market. It's not always in a choppy market. It's not in a reversal market. It's not in a breakout market. And most of the cheap EAs out there were developed around one specific market type, and that's their downfall. Although they might do very well for a short period of time, well, that's because you're in that market type. But once the market changes, which it does, those EAs typically fail. People's trading accounts get blown up, etc. You really need a quality system and a quality methodology, proven rule set in order to be successful. And a system that really addresses the different market types. And I made mention of those a second ago, but I'm going to say them again. There's trending markets, there's choppy markets, there's reversal markets, breakout markets, and consolidating markets, basically with no movement at all, so a consolidation period. Most systems are designed around one of those. currensys system works and has three separate and distinct programs that work as one. When we're in a particular market type, the other systems become quiet and help reduce the potential of false signals. I'm going to show you some recent charts and signals. I'm not going to go back in time 4 or 5 years ago and saying this was the perfect setup and you know, we profited and buy our program and use our program because we did a trade 5 years ago that was successful. All the charts that you see here are live and real-time charts. All of them are live and real signals. So very important that we're using all clean data. Um, and these are all real-time charts. These are 15-minute charts here, and I'll be blowing them up as we go through the different signals and the signal types that I'm going to be talking about tonight. First thing I want to talk about is our breakout system. A breakout system is one of the three systems is designed around the Bollinger Band breakout. Consists of about 15 to 20% of our signals. Breakouts really fill the void in our system very nicely, whereas our dots need volatility and need movement. The oscillation of MACD, okay, when MACD approaches zero line or flat market, signals are filtered out. You can see examples of these on our YouTube video, which I really want to encourage you to go to. That's on currensys FX. Got about 130 or so videos up there, plus our proprietary website, currensys.com, does a very nice job of laying out our system and all of the different programs that we have within our system. You'll see on YouTube there's a couple there that says, hey, look, Mom, no dots. And that's a consolidation period that I talked about in the different market types. And why that's important is that our dot system and our reversal system and as well as the breakout systems are all quiet at periods like that, waiting for market movement. That's market consolidation. And we need market consolidation for our breakout system. And FX is really unique in that sense that typically through the Asian market, we have consolidation or quiet period. And we need that in order to, for the system to identify ATR, which is average true range within that period of time. Typically when the market opens up, European open, we get a boost of volatility and volume into the market, which helps us trigger the breakout system. Our dot system and the breakout systems really complement each other. Breakouts need, that, again, consolidation period and 14 days to figure out what the ATR is over that 14-day period. So that's why when we tell people and mentor our clients, and we tell them that, hey, you need at least 15 days of data on your screen on the 15-minute charts, because the system needs to calculate those highs and lows of that period of time in order to figure out what ATR is. Breakouts need that consolidation, as I said during the agent session. Typically, we need about 8 candles. So 8 candles, that's about 2 hours of consolidation time on the 15-minute charts. As I said earlier, breakouts came about from John Bollinger, from his book, Bollinger Bands. Breakouts are good in Forex because they usually have periods of low volatility and low volume, and these are prerequisites for breakouts. Most trading systems have some sort of a breakout system, and to that end, not all of them are very successful. There's a balance when trading these. If entries are too tight, you get false breakouts. If they're too loose, you give up too much. Price is neither cyclical nor forecastable. Volatility is. It's very important to know when we're dealing with breakouts. Low volatility begets high volatility. High volatility begets low volatility. During the trigger period, the system is recording the highest high and the lowest low. Once this is done, the system adds a fraction of ATR and gives us entry prices. I'm going to blow up a screen here on the pound dollar this morning. Again, we had through the agent session, and I know there's a little delay in the screen, so I'll try to talk slow and show the screen. So we got crosshairs here during this period of consolidation. about around this time, which is the opening of the European market, we see volatility start to come into the market. We had a breakout this morning at 1.6103, and I know that I was in the trading room this morning talking about this trade. Many of our guys took this trade. Was a profitable trade. The market went down to 6065, which is about 40 pips. And we got a dot in the opposite direction, which was a very good exit signal for us. And we exited this on this validation of this dot. After this low period of 40 pips, we look to exit the market on a breakout. In this scenario, we captured about half of the 40 pips based on the gray dot validation. But we see here a consolidation period through the Asian market overnight for me, and then European open starting to add volatility and volume to the market, and we get a breakout. I want to see if we had one this morning, I believe. Oh, no, we didn't. We had a couple here, but that was a day ago, and I don't want to necessarily show you day-old charts. We did have something on the yen, euro-yen this morning. Again, consolidation, volume picks up, meets our requirement at 103.08, goes down to 102.76, about 30 pips of profit on this particular trade. I'm going to get into these other signals here, which are very nice down moves. And we had one on the pound yen around the same time. Again, consolidation through the Asian session. The European session starts to pick up. And then we have a breakout at 128.25. Low being 127.80. That's about 45 pips. We have a dot in the opposite direction. Exiting that at about 128.05. Leaving us with about 20 pips on this breakout. Now, we saw a breakout on the pound yen and also on the euro yen. When we have correlated pairs, and correlated pairs mean pairs that typically travel in the same direction, and also because they have the yen as part of the pair, typically those move in concert with each other. So if we're showing the market going down on these particular pairs, typically they move in concert with each other. And we'll get into that a little bit on how to increase probability of our trades by trading correlated pairs, or at least trading off of correlated pairs. If we're seeing like signals on those correlated pairs, that should be reconfirming the trend or the movement of those particular pairs. Now, when we get the breakouts here, and we don't have anything triggered right now because the market is kind of quiet. But what's happening in the background is the system is calculating ATR again. We're getting a consolidation period now. So the system is looking for an opportunity for a breakout. With each new candle, as we were going through here, the system is calculating ATR. And as we move through volatile time, we look for a change in the ATR. When the ATR changes by enough of a number, okay, that's part of our algorithm, we get this breakout line. The price points are only static for 15 minutes. So that means that every new candle, the system recalculates volatility, volume, and ATR. So we're always getting a fresh price after each close of a candle. So that's very important because the market is always moving. It's always doing something. So you need a system that is constantly calculating and reconfirming price and ATR. Criteria for a breakout really is price has to push through a price, like it did here at 1.6103. Price went through that point and triggered the order. And the price and the signal is valid for 20 candles. That's about 5 hours on a 15-minute chart. Our line here, this red line, prints for 20 candles, meaning that volatility, volume, and the movement of the market should stay consistent and move that way for the next 20 candles. So if the price hits our number like it did here, the line turns red. For short, blue for long. Now also, the system also alerts you to if the currency pair has moved a certain amount of ATR for the day. Remember, average true range. So if an average true range of, say, the pound dollar is 100 pips, okay, where it moves on a daily basis, all right, and the breakout has happened on a move that is more than 80%. What will happen to is our system will alert you with a yellow line prior to printing this red line as a means of caution. And it's telling you that, hey, the market has moved plus 80% for the day. Be careful. Possible follow through on that particular signal might be a little weak. Now, if the price has not moved 80% or 80% or less, then it will just print a normal line and say, okay, that the possibility of follow through is much greater. So what we're really talking about is probability and taking the higher probability trades and getting further flow through of price. If we have a plus 80% movement in ATR for the day, that's really a statistically poor signal. And the potential for that the market would move forward, is a little suspect at best. We're still going to get that breakout, but the system is going to tell you prior to taking that trade that, hey, know that the market has already moved. So you really don't have to calculate what ATR is or have a bunch of different systems or indicators on your screens that just clutter up things. Our system will show you that and warn you prior to taking that trade. 2/3 of all of the breakouts that are generated on our system, meaning a possible trade, are never triggered. So the system does a very nice job of filtering out poor signals. Again, breakouts have to be specific and show specific movement. Sometimes we have a conflict between breakouts and our dot system. I'm going to go back to the example of the pound dollar this morning. The pound dollar, we had a breakout at, again, 61.03. And shortly thereafter, and typically we get this, a dot in the opposite direction happened 3 candles after our breakout signal. The market is really consolidating at that period of time. And we got a gray dot, which is one of our lesser or weaker signals. So at that point, the market is really saying that we're in a consolidating period, and we really ignore dots in the opposite direction that happen right after a breakout system. We wait until we're in profitability, 40 pips or more, and then look for an exit strategy. And our exit strategies are very specific. After 20 candles, we look to get out if we're at break even or better. A dot in the opposite direction after 40 pips of profitability, and or a 314 EMA cross. Our preferred of them all is a 314 EMA cross. Then it would be dot in the opposite direction, and then 20 candle exit. So if someone's looking for a purely mechanical system that has specific rules and leave out a lot of discretion, we've created that here. Any questions so far? And I'm searching for a breakout right now here of the recent past. Breakouts are, excuse me, a reversal. Reversals are usually far and few between. And I'll get into the specifics of why that is. Reversal system is normally always against trend. And I apologize that I have no reversal dots to show you right now. I might have something on a higher time frame. All right, let's talk about this dollar CAD here. We had a reversal dot. So reversals, when the market is widely deemed to be chaotic in behavior, the market becomes more predictable. First, reversals must exceed a minimum number of pips. This prevents false signals. A minimum width makes sure that the market is worried before an orange dot can appear. For those who are Japanese candlestick pattern folks, a pattern which occur at the bottom or hammers are congruent with oversold conditions. Hammers are characterized by long wick with a relative short body, or excuse me, relative to the body, hammering out a bottom. Great indication of bulls buying and refusing to let price fall. Best hammers close near their candle's high. A short or shooting star, which we see right here, occur at the price tops and are concurrent with overbought and characterized by long upward wick relative to the body of the candle. The Japanese believe that there's trouble overhead, bears selling, price stop the price from going higher. The best shooting stars, again, close near the candle low. Reversals are about 10% of the signals generated by our three systems. They are almost always against the trend, and they are about 50% accurate. So why do you even ask, and why do we even bother with reversals if they're around 50% accurate? Well, we feel when they're right, they're really right. And when they're wrong, there's often an opportunity to exit that trade with a very small loss or a very small profit. Our exits here are dots in the opposite direction, MACD cross, etc., or time. On this particular orange dot, which is representative of a reversal, we got a nice strong move up. The market hammered out, or a shooting star came about, and printed a short reversal. And it was profitable. Within 5 candles, 1, 2, 3, 4, 5, 6, we have an opportunity to exit the market. MACD did cross below the 0 line and then start to increase again, which is one of our exit strategies. So this was actually a very good signal, and it was good for somewhere around 50 pips on the close of MACD cross. Not bad. When I talk about and mentor our students on reversals, I typically give those 5 candles of time in which to show their hand. If they're profitable after 5 candles, I'm moving down my stops either to break even or locking in profit. After 5 candles, if I'm not profitable on that particular trade, I look to exit the market gracefully. And by I mean gracefully is either at break even or a very small loss. And as I said before, reversals allow us that opportunity. After 5 candles, if the market hasn't shown a reversal and we had a nice strong move up, it did reverse back down and then continued back up. But this reversal allowed us 50 pips of profit. So I'm going to jump back to the 15-minute time frames here real quick. Now the dot system is really the workhorse of our system. And it's really based on MACD. We like it over other indicators as they're really not bound, or MACD is not bound by usually 0 and 100. It has no bounds. It can calculate down to the smallest of fraction. So really there's no bound. MACD has no bound. Most indicators are bound by 0 and 100. Also, we feel that MACD is one of the least, if not the least, lagging indicator. The dots give us about 70 to 75% of our signals. MACD started out as a MACD dot started out as a way to identify crossovers. And I'm going to show a chart again. Here's the pound dollar. MACD dot started as a way to anticipate crossover. Crossover is the histogram crossing over the 0 line, or if you have lines on your, as far as your MACD, fast line crossing over the slow line, or vice versa. And basically, what we found is that if you got in on a crossover, really you were late to the party. So the system tries to identify prior to a crossover, gets us in the market a little sooner in order to capture more pips. Like I said, we want to anticipate the cross. When momentum stalls, this is when we want signals to anticipate and enter the market. So really we see MACD rising, starting to fall, rose again, and then our calculation kicks in and starts to fall towards the 0 line. And this is when we want to get into the market in order to anticipate a move down. Here was a move up this morning after our breakout and our dot validated. MACD started to roll over towards the 0 line and actually had a very nice trade from 60.92 to a validation of 61.40. And you know, that's about 50 pips. Let's just call it one lot. That's 500 bucks. That's not a bad trade. And I'll show you how we would feel that that's even more of an important trade when we look at what the other correlated pairs did at about the same time. In most cases, once the algorithm has calculated the high histogram and starts to roll over, typically we get a dot that will print within 1 to 3 candles after the high or the low of the MACD is calculated. So let's do an example here. MACD high was calculated here. 1 candle later, 2 candles later, we had a dot. The black dot here, we had a high right here, and it calculated 1, 2, third candle in, we had a dot. So the system is doing what it's supposed to do. So to make our system even more accurate than it already was, we looked at and integrated the system to look at the 4 times higher time frame. Well, what does that mean? That means we're looking at a 15-minute chart here. The system is also looking at 4 times higher time frame. That would be the 60-minute chart. So when the 60-minute chart and the 15-minute chart are in concert with each other, or if they're in concert with each other, this is how we get the different color of dots. And I'll go through those now. I want to talk about real quick on that breakout on the pound dollar. We had a gray dot that validated to get us out of that trade. And then we had a black dot here on the euro about the same time that we had on the pound dollar. And I'm going to blow up both of these charts because this is what I talk about when we're mentoring our students about what the correlated pairs are doing. We see a breakout here on the pound dollar. We don't see one on the euro dollar. However, we do see the same dot at about 10:45. Same thing here around 10 o'clock on the pound and the euro, both firing out, both having successful up moves. And later on in the day, this was about 2:45 this afternoon. Same here, about 2:45. Move this down just a little bit. Exactly 2:45. Both of them had dots in. This one was a red one. This was a black, which is going to bring up to why we had a red dot on the euro dollar and not on a pound dollar. But both showing short, both moves down. So when I was talking about higher time frames and our system being in concert with both time frames, when we would get a colored dot. A colored dot, red or blue, red for short, blue for red, and we see one here on the Aussie, the pound Aussie this morning on an up move here, blue dot with trend, red dot short with trend, means that the system both on the 15-minute time frame and the 60-minute time frame are in concert with each other. That means they're in flow. They're both going the same directions on the same charts or same time frame. So both are moving lower. In this case, on the euro dollar, both are moving higher on the pound Aussie. And why is that significant? That's significant that we are trading with trend on those particular trades, and we should have more confidence in those particular trades that they are very good and quality signals. Now, when I talk about trading with correlation, here we have a black dot on the euro dollar, gray dot on the pound dollar, both telling us that the dollar is going to get a little weaker at this time. And because we're getting multiple, and I call them the heads of the 5 families, euro dollar, pound dollar, Aussie dollar, New Zealand dollar, dollar Swiss franc, which is negatively correlated to the euro, and we'll talk about that in a few minutes. But when we're seeing these correlated pairs doing like or similar things, that should give us more confirmation and more confidence to take those trades and to stay in those trades. So I'm going to make these back to where they were. And if you notice that I drew blue lines on these because I wanted to show you the correlation. Here's the Aussie dollar this morning. Same time around, this was this afternoon, I'm sorry, 2:45. Remember, on the euro and the pound, we had signals trigger at 2:45. Go figure. This is, again, one of the heads of the 5 families. This is the Aussie dollar, euro dollar, pound dollar, all having similar signals short at 2:45. And oh, we can't leave out the New Zealand dollar. That one actually triggered at 3, 15 minutes late to the party, but we had a nice down move. And these moves right here were 30, 40 pips, moves at the end of the day. But that's not too bad. So we had 4 out of 4 all being profitable today on down moves at around 2:45 to 3 o'clock Eastern Standard Time. That's not too bad. Now you saw some of the gray dots, and here we have one on the CAD yen. We had one on the pound dollar also. We make this a little bit bigger. Go back to that gray dot. A gray dot is an attempt to warn us about scenarios when it might not be prudent to enter the market. I usually tell our new traders not to trade gray dots. Gray dots take a little bit of finesse, a little bit of confidence in the system. And how I tell them to gain confidence in the system, obviously, is trading some of those or gray dots with the correlated pairs. So if I'm getting, again, like signals on getting like signals across my correlated pairs, that should give me more confidence, as I said earlier, to really take those trades, even if it's a gray dot. As I said before, the blues and the reds agree with the higher time frame, so they're with trend. Always, anybody who's ever read anything, trend is your friend. Well, that goes to trade. That's what we're saying here. Trend is our friend. So you want to take those trades and have more confidence that we are trading with trend. And those are red and blue signals. Just putting everything back to where it was before. Give me a second. So black dots, which we see a lot of, we have one here on the Aussie, we have one here on the New Zealand, we had one on the pound dollar down. Really what that's indicative of is it is with trend on the current time frame, but it's black because it's not coinciding with the higher time frame, that 4 times higher time frame. What this is really telling us is black dots are telling us that we're in a choppy market, that we should look that we're trading sort of in a channel where we see price like this New Zealand dollar, here having a dot shorting and now a dot going long. Same with on the New Zealand dollar, short and then going long. It's really telling us that we're trading in a channel. Lower your expectations on the amount of pips that you want to receive out of that particular trade, and look for, and I hate to really say these words, but support and resistance, where the market has been bouncing off of a certain price range. We really don't teach support and resistance because those are arbitrary numbers out there and really have no bearing on what price or the market is going to do. But however, when we're seeing certain things happen in the market and we see a channel or an opportunity to trade within a choppy market, we sort of try to lay out those highs and lows of the market on that particular day. Now, something that a lot of programs do out there is repaint, or say, hey, after an extra candle or whatever, that was a great trade, and repaints itself. Our system does not repaint. Never has, never will, hasn't in 5 years, won't in the next 5 years. And why we do that is if it doesn't meet our criteria, even if it becomes a good trade somewhere down the line, we do not record that trade. By the way, we're one of the few companies out there in the market that has over 359 reports, weekly reports, 359 reports dating back to mid 2005. What we do every week is we produce a report based on the signals for that particular week. We take every trade, whether it's a winner or a loser. So we don't just sit there and say, oh, we're going to throw out the bad ones and only report on the good ones. We report on every single trade, and for years, probably 4 years, dating back through 2005 up to 2010, we reported on the same currency pairs week in and week out, the same signals week in and week out, okay? So we have enough documentation to know that our system, through all of the markets that are available, trending, choppy, consolidation, breakout, reversal, that our system is robust enough to generate quality signals for the past 8 years. So dots, if they don't meet our requirements, and our requirement is that it validate within 5 bars. If it does not validate within 5 bars, the signal goes away, and it's a no trade. Our exits on dots, there are very specific, and again, if you want to be purely mechanical, you are trading a dot, and you exit on a dot validation in the opposite direction. We exit on a MACD cross if there's no dot prior to a MACD cross. And a time-based. I already talked about a reversal dot. We want to hold that particular signal for a minimum of 5 candles and then evaluate after that. On a black dot, we would want to hold that signal for at least 8 bars. And on a with trend, that's a red or blue signal, we would want to hold that candle for a minimum of 10 candles, unless our stops are hit. And not all of our signals are winners. So now one person asked, do you consider that the FX is controlled and manipulated by the market makers, smart money trading houses for their own positive benefit? Well, the Forex market is about a $3 to $4 trillion a day turnover. It's larger than all of the markets put together. And I don't think that any one particular market maker or hedge fund or something out there can really manipulate or play games with the currency pairs. The only person truly that has the power to manipulate a currency pair is the governments themselves, like the Swiss franc right now. The Swiss imposed a peg against the euro dollar, so the euro Swiss franc, okay, has had virtually no movement. I usually used to watch the euro Swiss franc. I even took it off my screen because they pegged it against the euro currency, and we're getting no movement on that particular currency pair. Typically, when a government comes in and tries to manipulate, like the yen or the Japanese have in the past, our system has been dead on times when there was some market manipulation by governments. But by and far, they're the only ones that can really affect the currencies. So no market maker or anybody like that out there can really manipulate the market. So I want to talk about some of these yen pairs that we had today, this afternoon, having like signals. Again, trading with the correlated pairs, CAD yen. Move this up here in a second. CAD yen at around 2 o'clock had a movement down. Aussie yen at about 2:30, signal down. Euro, this was around 2:15, movement down. pound yen, again, around the same time, movement down. Swiss yen, around 245 again, all having signals, all showing shorts, all being winning trades. Now this is today. This is not some moves 5 years ago that was a perfect setup or a perfect scenario, but these were nice setups. And we see all of the yen pairs that I watch: CAD yen, Euro yen, that's 2, Aussie, pound, Swiss, all showing signals short. And they were all 5 for 5. All about 30 or so pips, $300 on a nice afternoon trade. Not too bad. So now I want to open it up for some conversation. Anybody has any particular questions about the system? Oh, I did want to talk about our system and one more thing before you start firing away questions. Most systems are designed around one particular market. A system can't be used in other markets. So meaning that a system specifically designed for Forex, you can't manipulate it and take it over to, say, equities trading or options trading or futures trading. Well, I'm here to tell you that our system works in all market types, in all markets, meaning all market types: trending, choppy, reversal, quiet, breakout, and works in equities, options, futures, and Forex markets. I'm going to show you today on a couple of the contracts that we watch and trade during the day. This is the S&P 500. Shows some very, very nice trades. This is $100 a contract, so big moves. You can also trade a mini S&P, but this is today. Again, live feed, not something that I generated 5 years ago. But we had, if you're talking about this morning, since 10 o'clock, we had a gray dot, winner, blue dot, winner, black dot to end out the day. Still a winner, but market consolidation. I typically wouldn't take an S&P contract this late in the day, but it nevertheless is a winner. So that's 3 out of 3 this afternoon on the S&P. I'm going to show a CL contract, which is, if anybody knows, this is crude oil. And again, this afternoon, short. And let's talk about this gray dot here real quick. Within 5 candles, 1, 2, 3, 4, 5. It was a loser, but only a minor loss on this particular trade. If we would have followed our rules and our trading plan and what we teach people, we would have been exiting this particular trade before this big run up to lose a lot of money. Then we had a black dot short, nice winner, reversed on a black dot long, nice winner again, and a blue dot to end out the day, minor winner going into the close. Again, on the close of the crude oil contract, I wouldn't necessarily take these trades. But this black dot short, this black dot long, very nice trades. Gray dot again, unless you're sophisticated and understand our system, I would say to shy away from those until you become more proficient. But if you would have taken the black dot, again, indicative of a choppy market within a channel, you did very nice. Look at where the peak is on this particular move here. Look where the low is on this particular move. Neither one of these were breached for the rest of the day. Very nice trend or choppy market. 2 good trades. Big money to be made here on the crude oil contract. And I want to show a gold contract. This is over the last, this is a 15-minute chart, again, live, 5/9/2012. So not playing any games, showing you some great setup from 15 years ago. Huge move down. This was actually yesterday. And let me put on the crosshairs. Very nice move down, gold contract. Beautiful exit on a gray dot. If we would have taken this gray dot, again, it would have been a profitable trade after 5 candles. We could have managed this on a candle by candle basis, something that we teach our traders to do. And then we had another with trend move down. Nice move there again. And then we had a black dot that validated. Consolidation here. Didn't have a great trade. Red dot had an opportunity on this particular trade to get out of that trade at a break even or a minor loss. But these 1 to 2 to 3 to 4 trades were all pretty profitable. Nice moves. And this is on the gold full contract. You can also trade this in mini, and we can show you how to trade that, as well as to help you set up accounts for trading futures. And I kind of wanted to show a, see if I can find a equities trade. And this is Amazon, 5-minute trades. Show some high volatility here. Gray dot early this morning. Nice move up. Black dot consolidation at the end of the day. Didn't really go anywhere, but we didn't lose a whole hell of a lot here. We actually got out per our rule set with a little bit of a profit. Gray dot at the end of the day. A little bit of a move down, about $1, $1.50, and then a gray dot up. Got out at break even at best. But here is utilizing the system on equities. Again, this is 5/9/2012, not some trade from 15 years ago. This is live data. Eric asks a question, are this dot changing or as soon as they show up stable? I'm not exactly sure what you're asking there, Eric. So Cornell, still on the market manipulation. You're saying that it's manipulated every day by market makers, smart money, dollars. No government has the power to daily present in the FX market. Cornell, I hate to differ with you. I've been doing this a very long time, and I can tell you that the euro Swiss franc right now has been pegged. It is pegged by the government, and that trade on that particular pair is dead, has been dead for months, and will go nowhere and is untradeable. That is manipulation by the government, not by market makers, not by so-called smart monies or anything like that. They do not have the power in a $4 to $5 trillion a day market to manipulate anything. They don't have the money, and they don't do it. They can't do it. So, but if you want to believe that, okay. So utilize our system and pick out when these so-called market makers and smart monies and all the rest of the guys are manipulating the market, and follow along with them, because our system, as I've showed you through the past 50 minutes, has picked out very nice trades, and that's only today. I can go back in history. You certainly can do that, looking at our 350-some trade reports, and show that our system has been profitable in all market types. And if you want to throw market manipulation in there, I could care less. Do that, and we still were profitable. 15-day data for the 15-minute charts. What would that suggest for other time frames, please? When we're talking about 15 days of data, our system was designed on the breakouts around the 15-minute time frame. And as I said before, we need at least 14 days of data to figure out the daily ATR. So that's why we ask for at least 15 days of data. Normally, I ask for 30 days of data. I want people to be able to see what's going on. So I never have too much data on my screens. 30 days is typical. 1-2 days. Even the DOT system needs more data. So I just give an arbitrary number out there of at least 30 days, but a minimum of 14 days. Dennis asks, what platform will this trade on? Well, we do a couple different things. We have it on NinjaTrader, eSignal, multi-charts or MCFX, FXCM Strategy Trader is one, and TradeStation. So we support 5 right now. We're also looking at look at MT4 and are testing and doing some research there to see if there's consistency, and that should be an offering sometime in the near future. Oh, okay, Eric, I got what you asked. Are dots moving, or they stay on the place they show up? No, the dots are fixed to that particular bar, and if they validate, they stay exactly where they are. If they do not validate per our rule set, they disappear. But they do not travel. They do not repaint. What you're really talking about is repainting somewhere to show that that was a great trade. Well, that's a lot of the EA or the cheap systems out there that repaint. Our system will not repaint, has never repainted in 8 years, and when we offer something on an MT4 type of a basis, it will not repaint there either. It's either a trade or it's not. It's either a winner or it's not. We don't make any bones that our system is not 100% winners. Never did you hear me say anything about being 100% accurate 100% of the time. We do hit streaks like today that all the signals on a particular correlated pair offering are all winners, but that does not happen every day. And when they do happen, we need to capitalize on those movements and be in the market on those trades. Very important. And that's all part of mentoring, telling you how to trade the system, how to develop a trading plan. Okay, these are all things that we've been doing for the past 8 years, helping traders be successful. I want to call out Forex Peace Army real quick, and our reviews at Forex Peace Army. There's somewhere around 60 some of them out there, and I challenge anybody to find a better reputation and a better offering of support to our clients than our record. I think it speaks for itself, and certainly the ability of our traders to be successful goes along with our support. We offer unlimited support. We're going to be using our system in a live daily trading offering, so there'll be the ability to get real-time and live support. Not that our support via email and or someone can pick up the phone or get me on Skype. We publish our phone numbers, so there's actually a person behind the system. Also on Skype, you can certainly see me out there. It's john.currensys1 is my Skype, so I'm available. We're just not, these spammers or marketers out there that have no phone numbers and only deal with you on email support, and if you're lucky to get email support. So we're there to help our traders be successful. Now, anybody interested in demoing the product, we're going to offer that as a 2-week demo. Please reach out to Mike if you're interested in demoing the program. Also, we'll be using a daily webinar where I'll be showing charts talking about different signals to also help you to become familiar with utilizing the program within that particular time period. So you see the real power and the benefit of not only our mentoring services, but also our system.
Okay, John, thank you. I think I want to give you a little break for a sec. You've been talking for a good hour. Um, I just want to follow up and continue from where Don's left off here and talk about our trade room. So what's really important, folks, is to focus on what John said about the support that's offered here. You know, this is a system that will take some time to learn, but it has been tested and tried over time. 8 years is a long time. And I want you to go out there and find anything that's been out there for more than 2 years that's still working. We've got something that's been working for 8 years. I'm going to give you the link to the Forex Peace Army site right now. This is really what sold me when I was doing my due diligence. And just, everybody, I want you to click on this link right now. Because I know a lot of you get all sorts of emails. You get all sorts of products being marketed to you. This is something totally. Let's open the link together and look at the top there. When you click that link, what do you see at the top? A rating of 4.6 out of 5. Total reviews 60. So out of 60 reviews, that means they only had one person complain. They have no cases open with them. And if you scroll through and read these reviews, and I know John highlighted this, but I really want you to get granular with this and read it and look how personal these people are. They are so happy with the support. There are people here that didn't know nothing about trading. They didn't know how to use their computer that well. Phil and John, over the years, always took time out to walk people through. And I personally think it's a challenge to run a business like this, but they're willing to do it, and that's what's important. Now let's come back, get away from the site. I want to talk to you about our trading room that John mentioned. Every day, early in New York, John comes in around 8:30. He does an analysis of what worked during the London session. So you can take notes and say to yourself, okay, that's how that dot worked and that's how this worked. There's also a detailed manual provided to you. The manual goes into a lot of details on every single strategy. And what you need to do is put together that trading plan and move forward, right? I have been at this personally myself for 2 years. There's been a lot of us are system shopping. John, do you want to mute it because I'm getting an echo?
Oh, I wanted to jump in real quick and steal.
Okay, go ahead, jump in. Go ahead.
Thunder for a second. You know, Mike talked about our manual. Our manual, in my opinion, and I want to take a step back 8 years ago. 8 years ago, I found this system, and I was somebody that was shopping all over the place, trying to find a system, trying to find a mentor to help me become a better trader, working on my plans, etc. I bought the system just like everybody else did. So I didn't all of a sudden, you know, fall into currensys and just work for the company or, you know, our brokerage services or anything like that. You know, I bought the program, I put my money on the line and learned through mistakes on how to utilize the system. Although Phil was a tremendous mentor, still a lot of the tricks and the things like that I pretty much found out myself, and that was along, you know, with trial and error. My trading style and my teaching style a little different than his. You know, I want to show you what works and what, because of my benefit of having to find it out on Hard Knocks, and to make it easier for all of our people. Our manual is over 240 pages long. Really goes in detail about the system, why it does what it does. The unique thing about our program is it's mathematically based. It means it's reproducible. You can go back in time and and go forward into the future, and you're going to have the same things from a mathematical and probability standpoint that happens over and over and over again. And that's what you want to see out of a system. So very important to have a system like that. But I help people. Our group helps people with putting together trading plans, smart trading plans. Most people don't even know what a trading plan is. Okay, and a trading plan really is your business plan of how you're going to trade the system, the market, what time, what you're going to do, when you're going to do it. Okay, it's very detailed. You want it to be as detailed as possible so you don't break your own rules. Okay, very important. And that's really the downfall of people because emotion, fear, greed, all enter into the trading game. We don't want to lose money, especially when hard dollars are on the line, okay? We need to enjoy to lose, okay? And I get into that in helping people from a psychological standpoint that if we have set our stops and have calculated the risk on that particular trade, we should be able to go and flow into that trade without the psychological baggage that always comes in with trading, because we've already defined the risk. This is the worst beating that I'm going to take if I get my stop loss hit. Those that don't trade without stop losses or double down on losing trades, etc., okay, are only going to blow up their accounts. It happens all the time. A lot of the new FCMs or RFDMs, they're called today, especially that are regulated by the NFA, which we are regulated by the NFA, by the way. I want to make that very clear. That's why I tell you that past performance isn't always indicative of future results. But all of those FCMs out there now are saying how profitable their traders are. And some of the newest reports that I looked at, about 70 to 80% of their traders fail. And why? Because they don't have trading plans. They don't have a methodology. They've been sucked into the Forex market by all these pump and dumpers out there of all these cheap EAs and things with no support, no mentoring, no nothing, and really just want and prey upon you blowing up your accounts. A lot of these guys are getting smart and offering educational programs because they've finally gotten wise to the fact that it's hard to get a new client and keep them active and keep them profitable. And that's what we attempt to do with our system and our mentoring services. Mike, jump in. I'm sorry to interrupt you before.
That's fine. I think Steve's in the room as well. John, if he wants to join in, I could give him a presentation. Have you spoken to Steve?
Yeah, I think Steve is there, but go ahead and finish up what you want to. He'll ping me if he wants to.
Yeah, so I just want to. Yeah. Okay, thanks. I guess now, folks, it's time to decide. What is it that you want to do with your trading? A lot of us are in situations where we've moved from one system to another system, and we're all looking for that holy grail. But the reality is, in a lot of these system sales, there's no support, there's no hand-holding. And what's really required is a mentor. Somebody's going to be there, kind of hold your hand every day until you get going. It's like when I was teaching my 6-year-old how to ride a bike. First, she's on the training wheel, and then I took one wheel off. And then okay, go ahead, John. And then I took the second training wheel off. And then she was on her own, riding that bike, and she was the happiest kid on the block. Right? We got to ask ourselves, when are we going to stop this madness? Intraday trading is so difficult, folks. And if you don't have something guiding you, you're just going to keep getting killed every day. Look at your everybody. Anybody. Look at your trading blotter. Look at look at what happens at the end of the day. How many times have you said to yourself, "Oh, I just overtraded. Oh, I just pulled my stop. Oh, I took profits too early." Right? We need something to guide us into staying in the trade. And I think John showed me an example of it earlier today. Was that the one thing I really like about this system is that on the 4-hour charts, it keeps you into these trending. When something trends, it keeps you in through the whole trend. You don't sell too early. You'll never sell too early. You will never kick yourself going, "Oh, I just let another 200 pips go." That will never happen, right? And recently we had an example of that. 2 weeks ago, the euro dollar and the cable, both of them had signals on a Monday. And on the 4-hour, the signal was like 35 pips away from the low of the day. And on an intraday basis, you tend to say to yourself, "Oh, that's so far away. I missed it." You know what the cable did after that? Go look at your charts. Almost 200 pips. It continued up. The system gave us the alert to buy and put your stop 30 pips away and forget about it. And after that, every 4-hour candle just kept going up, 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 and the cable just did not stop. And I remember, I think after 2 days, some news came out, and the cable, the Great Britain pound US dollar is the cable, it came down a bit. And I remember John in the room saying, "Okay, we don't care about news. We're just focused on price action." And right after that, with like 6 hours after, the cable went back up, broke that high, and continued going higher. Even though there was some news that came out that their central bank is going to be, I guess, the fear was rates were going to go down and they were going to loosen monetary policy, and therefore and I don't want to make it complicated for everybody here, but what happens is when the market hears news like that, they tend to react and sell that currency. Well, I remember John in the room saying, "We don't care about that news. We're looking at the price action. And we're still in this chart. We're still in this 4-hour trend." And it continued many pips after that. So today, folks, you need to decide when you're going to stop this madness, right? Trying to trade intraday on your own hasn't been working, and it won't work without some guidance and a system that allows you to know when to get in and when to get out. The other thing a lot of folks are interested in, we'll work on this, we'll talk to you about this later on another webinar, is our automated offering and the ability to have these trades taken for you. So some of you are working full-time, you can't be in the room every day, you're going to work. Well, we have that solution as well. Actually, I find more than 80% of the people I talk to are looking for that. They're looking for somebody to just trade the account for them, somebody who they can trust and feel confident. They're not going to wake up one day and they're down 20%. This doesn't happen here. Go ahead, John. Sorry about that.
Yeah, no problem. You're stealing my thunder, Mike. But nice job there, what you said. I want to go back to something that Mike said that was very important. And in one of my recent weekly reviews, I talked about holy grails. And you know, people often look for a holy grail, and they look for a system or one thing that is a holy grail. I'm here to tell you that there are holy grails. And what the Holy Grail really is a system or a methodology, okay, that has stood up the test of time. Your trading plan, psychologically, you're ready and prepared to trade the markets. What happens when those three things are all firing in the same, the same time period, and we're in concert with each other? We've all heard about trading in the zone, this zone. Michael Jordan being in the zone, playing basketball, etc. That's when basically we are, fluid, working with the markets. We see the markets changing. We become basically one with the market. That is the Holy Grail. Okay, to have one of these things outside of that, basically that perfection or everything being in unison with each other you do not have a holy grail. Whether it's a trading system that doesn't work, or a trading plan that you don't have, or psychology being messed up for the day, you're setting yourself up for failure. No holy grail, no pips for the day. Okay, each one of those aspects need to be worked upon and need to be organized in order to be successful. And we're talking about success, long-term success. For you to make 20, 50, 100 pips tomorrow, whatever, okay, but then blow it the next day is not successful trading. All right, we know we are going to have days like that. Okay, but in order to be successful, these are the things that we're here to teach you how to be successful and how to navigate these various markets. I showed you futures today. I showed you some equities today. I didn't show you options because they're closed right now, but I did show you a lot of Forex stuff and a lot of good signals, okay? So we help you with those other aspects, and psychology is one of the biggest pieces for me, for any trader, in order to be successful. You can have two of the three, okay, and be semi-successful, but not really go very far. You have to have all of those. And that's some of our mentoring services and some of the things that Mike's going to talk to you about and how we're going to help you to become successful utilizing the program. And something that we've said in a lot of our reviews is we've never given up on a trader who didn't first give up on themselves. Okay? We don't sit there and throw a trader that, might not listen to us right now and, comes back to us 6 months from now and wants to be retrained and wants to understand the systems. I have people that leave us for whatever reason, jobs, debts in the families, etc., come back to us a year, 2 years later and says, hey, I want to rejoin, can you help me? Can you do this? Can you do that? And we always have said, yes, come back, no problem, and we want to help you to be successful again. So very important. A lot of these cheap EAs and marketer folks aren't out there 6 months from now. So, we've been doing this for 8 years. So, okay, Mike, sorry again, jump in.
No, I think we could, we're pretty well covered as much as we need to cover, and I think folks need to sleep on it tonight. Do their research, click on that link, and send me an email. We can quickly get you started with a 5-day trial in the room. It's Wednesday today, so we most likely want to we could get your trial started as early as Monday next week. I just need to obviously wait for all the emails to come in, and we'd set up a specific room for the 5-day trial, and see for yourself. Once you're in that room, and we have some folks in the room tonight that recently signed up and have been in the demo room, and I welcome them to go ahead and make comments. I also have an email from one user who's been testing for 2 weeks, and I can read it to you. But I think there's a lot of these type of emails on the currensys website itself, the Forex Peace Army site. You can see all these positive remarks there, and just send me an email and put in the subject heading currensys demo, and we will get you set up with the 5-day trial in the room. If you're ready to buy the system and you just want to move forward, well, we can give you the link to buy it right now, and you can go ahead with your purchase. So I'm just going to pull that up here. Any other questions with respect to the system, how you can make money with it?
So, when I'm talking and giving these presentations,
Okay, there's a link to purchase the system if you're ready to move forward tonight, and we'll get you set up. And there was one question that talked about the various platforms. A lot of you are at MT4 and you've become accustomed to it. We have an MT4 release coming up shortly. It's in beta at the moment, but that will be something that will come out shortly. And I think what's important is just you need to come into the room every day and get comfortable with how the system's working, and have your demo account set up and take the alerts. And when you take the alerts based on the guidance that John gives you in the room, you're going to see profitable trades. I think one of our members that are here tonight, Tom C, mentioned in the room the other day, I didn't paste it, I was going to copy and paste it here. Out of 9 signals, 8 validated, he took all 8 and they were profitable. And the 9th one, validate, he didn't take it. So he didn't lose his money. So John, you want to comment on that?
Yeah, can everybody hear me? You know, that was great. The markets have obviously been producing some great trades right now. You know, I'm happy that, you know, as a matter of fact, Tom reached out to me and said that, you know, of those 8 trades, there was, you know, something like 250, 260 pips. You know, that's $2,500, guys. That's chump change compared to, you know, all these other systems out there that generate you nothing. Obviously, the payback time on the you know, on the cost of the system and everything, it was that day. So is that typical of things that happen all the time? Well, yeah, but you know, obviously we don't always go 8 for 8, so that was a great thing, and I'm glad that Tom had the opportunity to you know, catch those trades. But and, you know, bottom line, guys, is that, you know, we're here to help the traders to be successful. Sure, we would like to sell some code along the way, and, you know, that's how we do some things. But, you know, we're also brokers. We can do things with trading, you know, platforms, and certainly help set up, you know, trading accounts, you know, to maybe offset some of the cost of the programs. There's a lot of things that we can do together. You know, we're here for the long term. Obviously, been doing this for 8 years, so you know, we're not. We hope to be here for another 8, 20, 30 years. So anyway, any other questions? You can also reach out to me, john@currensys.com. Feel free to send an email. Certainly send emails to Mike. And or Mike, I think in the email that you sent out originally, gave my phone number if anybody would like to reach out to us. The phone is answered 24 hours a day, and we do have an answering service if I'm not in the office. We'll take the message, and I'll get back to you as soon as possible. If it's after hours, obviously the next day. If I'm on a line or something, you know, I'll call you back next in line. But certainly, Mike, you can give out that number, and no problem with talking to individuals. All right, that's it for the night. I believe we've been here for, and I really appreciate all the people that came, gave us, you know, an hour and a half of your time. Certainly appreciate that. That also means that you're, you know, dedicated and want to find something that works, and want to find mentorship that actually people do mentor people out there and help you to be successful. So that's indicative of your dedication to your trading.
Okay, great. Thank you, John. I think we're good to go here. I'm just going to leave your phone number for folks. The email is there as well.
Yep.
Leave me an email, and I will certainly get you set up on that demo.
And oh, by the way, Tom, direct that comment to Mike specifically, and we'll talk to you individually about, you know, an issue like that. Okay.